A couple of other plays to keep an eye on. One is the Eagle Ford Shale I mentioned a little while ago in South Texas. Again, most people first thought about this primarily as a natural gas find. However, the Eagle Ford Shale is actually located in South Texas. It's a very long area, a very wide swath of southern Texas has Eagle Ford Shale under it. The northern part of this play is actually the actual layer, the productive layer of the shale is located a little bit shallower, and there it's primarily actually oil production. This part of the Eagle Ford Shale is primarily producing oil. Then there's a middle section just to the south, which produces a mix of crude oil, natural gas, and natural gas liquids, or NGLs. Natural gas liquids include things like ethane, propane, and butane. These products tend to trade at a price around a barrel of NGLs will typically trade around 60% of the cost of a barrel of crude. So high crude oil prices are really benefiting the northern and central part of the Eagle Ford play. The southern part is what we call a dry gas play. Dry gas just means primarily methane with very little natural gas liquids in it. As all of you are very well aware, this area of the play right now isn't particularly exciting because gas prices are too low to make it economically productive. Another play to look at is the Niobrara Shale. We're also seeing quite a lot of liquids production from the Marcellus Shale in Appalachia. Okay, so that brings me to the point of how do we play it? Well, there are really several different industry groups that are benefiting from this. First, we have companies that are major producers. Now, if any of you have been investing in a lot of natural gas producers, you probably haven't had a great experience over the last 6 months or a year. A lot of those natural gas companies, if you listen to their conference calls every quarter as I do, you'll hear them start talking about focusing more on oil production and less on natural gas production because of those ultra-low natural gas prices. But a handful of these companies have actually, for the past several years, been focusing more and more on oil. And they're really benefiting right now because they're producing increasing quantities of oil in an oil market where we're seeing oil prices in the low to mid 80s. And I think we're going to see $100 a barrel oil either by late this year or early in 2011. These companies are really going to benefit, and you're going to see a lot of upside here. One example is a company I've recommended for a long time called EOG Resources. The symbol, pretty much obviously, is EOG. EOG has been really a pioneer in buying up land in a number of these oil shale plays. For example, the Bakken Shale, and they're also a major player in the Eagle Ford Shale, and really in that oil and NGLs rich window. They really aren't spending much time producing from that dry gas window. So EOG is one of the major producers. I also just recently put up on the Energy Strategist website a report containing a handful of other plays that are well focused in these areas. One thing to keep in mind when you're investing in these stocks is be very, 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 very careful. You'll see a lot of newsletter companies out there. You'll see a lot of people, companies promoting themselves as plays on the Bakken Shale, the Niobrara Shale, or the Eagle Ford Shale. And the reality is that these companies just don't have very good acreage positions. The key with all these plays is that there's a very defined fairway of this play. And if you own acreage in these fairways, you have very productive wells. You have wells that in the Bakken Shale can produce thousands of barrels of oil a day, which is almost unheard of for an onshore well in the United States. You have companies which are located maybe just a couple of counties away from that fairway, and their wells are 10 times less productive. So be very, very careful and focus primarily on the names that I reveal in that free report. The other area to look at is the oil services sector. And these are mainly companies that are going to be either contract drillers that are focused on drilling these horizontal wells or service companies that are involved in fracturing. The key trend to keep in mind here is that producing the service intensity of drilling a well in one of these shale plays is many times more than drilling a traditional vertical well onshore. So every single well that's drilled by these companies, which are very aggressively targeting plays like the Bakken and Eagle Ford, means as much as 5 to 10 times more revenue for an oil service company than a traditional vertical well drilled in an area like, say, the Permian Basin of Texas. So we're seeing a real boom in demand for these key oil services. Again, there are a number of oil services companies out there. There are a number of contract drillers out there. Many of them will tell you that they're plays on this growth. But the reality is only a handful really dominate this industry. And this is something that I'm going to be discussing in more depth in the upcoming issue of the Energy Strategist, which will be up on the website in just a few days. And just a handful of companies that are really involved in that area. The final sector I would mention is really master limited partnerships. This is a sector I've talked about a lot. These companies are MLPs, are very popular right now because they offer very high dividend yields. Actually, they're not really dividends, they're actually tax advantage distributions. You'll only actually get taxed on about 20% or less of the actual distributions, dividends you receive, because a lot of it's considered return of capital by the IRS. So it's a really hot sector right now, a very high yielding sector. Two parts of this industry to look at in terms of playing the shale. One is companies that are building pipelines that will serve these shale finds. For example, one of the problems with the Bakken shale isn't that the wells are hard to produce or that it's expensive to drill. One of the biggest problems facing companies there is actually moving oil and natural gas liquids produced in this area out. As I mentioned earlier on, 10 years ago, most people thought that Montana and North Dakota production would be declining straight through, for the foreseeable future. In fact, might stop entirely as those wells simply ran dry. So nobody built any infrastructure there, storage, pipelines to handle all that production growth. So these companies have a big problem. In fact, EOG, the company I mentioned a little while ago, is actually moving a lot of the oil in the Bakken that they produce out by train, not by pipeline, but by train. There are a handful of MLPs actually building pipelines through this area, serving this fast-growing Bakken shale. There are a few others. One name I would mention, Enterprise Products Partners, symbol EPD, one I've mentioned before. They are actually the leader in the Eagle Ford shale that I mentioned in South Texas. The final area of the MLP industry to keep an eye on, there are a handful of MLPs which are upstream. They're actually producers of oil and natural gas. And a number of them have actually been focused on acquiring horizontal oil plays in areas like the Permian Basin of Texas. In many cases, these are not unconventional wells. These are conventional fields, sandstone-type reservoirs, but they found that by drilling horizontal wells instead of traditional vertical wells, they can actually make these conventional fields also much more productive. They're benefiting from pretty strong production growth simply by going into these old areas that are producing oil for a century now and really retooling wells using horizontal completions, making those wells much more productive. I see those companies benefiting as well. Once again, all of these picks, the two I mentioned, EOG and Enterprise, as well as a host of others, are up on the free report available on my Energy Strategist website. And we're actually offering a free trial to the Energy Strategist right now, and that's available by clicking the link at the bottom of your screen. Thank you very much.